Hello everybody, welcome to this week's live stream. Just get that up. Gold is taking a hammering. Didn't see that coming. We'll have a look at that first of all. So just if this is the first of these you've attended, we do these normally every Friday at 2:30 UK time. And the way it works is we'll have a look at the major announcements to watch next week. Then we will jump on to the platform, take a look at the major markets, gold, silver, oil, stock market indices, a couple of currencies, a couple of cryptos, and then I jump into the questions and go through any questions, any markets that you want looking at. So that's it. Right, let's get into it. Let's do the risk warning first. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences as a result. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 78.79% of retail investor accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Right, let's take a look at the major stuff, the major announcements for next week. Next Tuesday, UK unemployment. That'll be interesting. See what the unemployment numbers look like in the UK. Clearly the pound has been absolutely hammered against the US dollar in recent weeks. So interesting announcement then. European GDP. So how well or not is the European economy doing? Clearly, at the moment, everyone's talking about, well, not everyone, but people are talking about the threat of a potential recession as the year unfolds. We've already had 1 quarter of negative growth in the US. So it'll be interesting to see what those European numbers look like. Wednesday, the 18th, another big one. UK inflation and Canada inflation. Clearly, inflation is the hot topic of the day or of the year so far, plus, of course, the Russian invasion of Ukraine. But we came into this year and inflation was the big worry. It's not going away, I don't think, anytime soon. So it will be interesting to see what those numbers look like. And then next Friday, we have the China interest rate. To find out more about the company, go to Capital.com. Any questions after today, drop me an email, david.jones@Capital.com. You can follow me on Twitter. I'm at Jones the Markets on Twitter. You can find out more about my trading approach on jonesthemarkets.com. And of course, follow Capital.com on YouTube, Twitter, and Facebook. Right, let's get into it. Let's look at gold. I did a gold video this week. I did a trade on gold this week, and it had been a good market this year. But it got stopped out really quickly. And of course, that's what stops are for. So a few trades have been stopped out this week. That was the gold trade from earlier in the week in the video. Got stopped out on that. So a few of them, because of the volatility we've seen this week, have been stopped out. And there's still a load of existing positions running in various bits and pieces. But I thought, let's start things off by taking a look at gold. I am surprised, clearly, otherwise I wouldn't have bought it, that it's gone sort of sailing down towards 1800 this week. I was watching it for my own trading and thinking about being a buyer because the trend from August last year was still up. I mean, clearly we saw it run up to 2070 on the Russian invasion of Ukraine. Backed off a lot since then, and I just thought, well, maybe we'll go back to this more normal trend now. But here we are, broken the trend line. Now, personally for me, just because a market breaks a trend does not necessarily mean that trend is over. So I, in my approach to trading, I'll often give it a second chance to get back into the trend. So for me, going into next week, for my own trading, it's still an interesting opportunity. I wouldn't be a buyer today because the price is still going down. So for me, the really big levels that I'll be watching next week, 1750 on gold, and that is the mid-December low. So for me, I am still expecting a bounce. I'm going to be patient though. I'm going to wait for this market to stop sliding because it's still weak. You can see it was what? It was $2,000 an ounce on the 18th of April. So what's that? A month ago. And here we are at near 1800. So it's dropped 10% in under a month, gold. And clearly, one of the drivers here is a stronger dollar. We'll take a look at the dollar in a second when we get into currencies. So weak, falling out of the trend, but for me, this is the zone I'm watching. Let's say 1750 to 1800. So I'll be looking for a bounce, but I'm going to wait. I'm going to sit on my hands and wait for it to actually find some support, because it's not finding any support yet. So I think it's going to be an interesting week for gold next week. If we take a look at silver, we did do a video on silver this week as well. I mean, silver has absolutely, I think maybe collapsed is exaggerating a bit, but it has, it's gone from $26 an ounce, again a month ago, and it's traded, where's it traded to today? $20.44 today. So, silver has lost $5.50. Well, actually, that's a 20% slide. Silver has said a 20% slide, has had a 20% slide in about a month. And here we are. And what's interesting for silver, the video I did yesterday, I think it was yesterday on silver, yeah, it was. It's fallen out of this massive sideways range. Now, I've often said that I find silver all the way through last year a really boring market, because it would try and get a trend going, then it would fall out of the trend and just break trends really quickly, and just stuck in this big sideways range. The fact it's breaking out now, normally this would be considered a pretty negative sign, the fact that silver is breaking lower. So at the time of recording today, silver is at its lowest point since July 2020. So we're at a 22-month low for silver at the moment. So for me, on silver, I would be a seller of rallies. I think the risk is, of course, if we see this ongoing dollar strength, that we're going to see silver continue to be under pressure. But it's quite a big deal that it's broken out of this big sideways trend. I suppose an aggressive trade on silver, and I did mention this yesterday, it's probably not what I would do myself, but I think there is an argument for being an aggressive trade here, is to wait for it to stop sliding. First of all, it is still sliding, and then take the view that perhaps the market has overshot on the downside, and be a buyer with a fairly tight stop below whatever low it ends up making in this slide, and see if it can push its way back up to 22, 23. But this break in silver is it's not a good sign. When a market has very, very clear support, in silver's case, it's been about $21.50 since September 2020, and here we are just pushing through. We've got, if we flip it over to the hourly, we've got a clear trend off those $26 levels in silver. And I put an order in yesterday. Oh, it's been filled. There we go. My silver order got filled at 1:20 today, so about an hour ago. So I had an order to sell at $20.50 if the market broke lower. So I am, in this account, I am actually short silver in this account with a stop at 23.75. And really what I was doing when I did the video yesterday, I thought, well, if it breaks lower, I want to be in case it really starts to fall off. I mean, it has really fallen a lot anyway in the last month, and my stop is at 23.75, so it's up here. So we'll see. I think it has reached a bit of an extreme. It wouldn't be surprised perhaps to see something of a bounce back, but for me, I think the risk is this is now the trend for silver, that we're in a downtrend, and I'd be looking to be a seller into strength. Let's see what happens. But let's go and have a look at some currencies. So the dollar index, and I say this every week, absolutely my favorite market, the dollar index. And it's, for me, in my own trading, it's been a really great 12 months trading the US dollar index. And I said last week, we never do a video about the dollar index on the channel because no one ever watches it, but everyone always watches gold and silver, which were boring markets last year. But look at this. What a wonderful trend it is in the dollar index. So going back to May of last year, this trend started building. I started doing my first trades thinking it was going to go higher in January of last year. I was far too early, so I was in a position from January, and then in May, June, it did start moving, and I've basically just been adding to my winners on the way up. It's almost a textbook trend, that, isn't it? And here we are again today, fresh highs for this move. So that is the dollar index at a 20-year high. And I think someone's just said, how high can it go? Well, who knows? That's always the question, isn't it? When these markets get a move on like this, they can always go, I think, higher or lower than you're expecting them to. We don't have. Let me just see if I'm going to just have a look on something else. We've only got data going back to about 2007. I saw someone say the dollar's too high. I mean, I would say that yes, it is extreme, but it's been extreme for a while, and I think anybody who's been perhaps trying to call the top in the dollar would have been getting burnt all the way up. So here's a really long term going back to 2000 on the dollar. So at the moment we are here to December 2002 levels for the US dollar. There is resistance up, from the old days around 108, 109, which is still 400 points higher than where we are now. So for me, I do agree it is overcooked up here, but it has been, to be honest, it's been pushing to extremes since late March. So I don't know. So I've got a couple of trades running on the dollar index. I've got stop losses being trailed up. We'll see what happens. Even if we saw a big sell-off for the dollar from here, I'd absolutely be a buyer of a dip if we saw a sell-off for the US dollar. Even if it drops 700 points or 600 points, it's still within this trend from last year. And of course, this is one of the reasons that gold and silver are so weak. When the dollar's going up, it puts pressure on gold and silver. So we'll see. But it's been absolutely great trendy market. And as I say every week, if it's a market you're not watching, it's well worth watching, the dollar index, because it's the dollar against a basket of different currencies, against the pound, the euro, the yen, the Canadian dollar, the Norwegian, the Swedish, the Swiss, blah, 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 probably a few more. So it's a really nice blended way of looking at markets. So I've just come out of ARK. I've closed my short on ARK. You can see that in the bottom left. We did that in a live stream, actually, didn't we? Ages ago. So that made £234. So ARK has clearly bounced up today. So there's the US dollar. Let's take a look at some of these other currencies. Look at pound against the dollar. I mean, it's grim. Poor old pound. Down again today. So 121.70 today. I mean, again, you can see, where is it now? We had the corona lows, which took the pound back to 1980s levels against the US dollar, down at 114, something like that. And here we are. We've got big support for the pound coming up around about 120.50. So 100 or so points below where we are now. And again, you can see, if we take this chart over, it was absolutely in a downtrend. If we were looking at the pound up here in Feb of this year, absolutely this market was in a downtrend since May of last year. But again, it's really accelerated away. So I did see somebody say, there could be a buy on the pound. And yeah, maybe, because it is so overextended. But at the moment, I would want to see it stop sliding, and it's still sliding, because at the moment we'd just be trying to catch a falling knife, wouldn't we? That's what it looks like on the hourly charts. So we'll see. Still pretty weak. So again, even if we get a rally in the pound, I'd be looking for an opportunity to sell short. Euro dollar, same story, of course. Euro dollar, there's the euro against the US dollar. So the euro is trading. There are big levels coming out from the euro. The last major base in 2017, down around 103.50. So again, if the euro is going to start recovering from anywhere, then this is one area for me where definitely I think, well, shall we see some strength coming in? We're not seeing it yet, but I think it's interesting markets to watch over the next few days, next few weeks. And the last thing we'll look at on currencies is euro sterling. So euro against the pound. We don't look at that one normally. But because the pound has been relatively weaker than the euro against the dollar, we have seen the euro against sterling bounce back. You could argue it's an opportunity to sell short, and I would probably go with that. I think if we had a bit of a blip up by euro sterling back to 85.50, I'd be inclined to be a short seller of euro sterling. But there we go. But it's all about the dollar at the moment. It is the dollar strength for various reasons. The expectation of further relatively large rate rises in the US. It's seen as a safe haven, when all other markets are going crazy. The US dollar is seen as a safe haven. So again, it's taking away, I think, some of that money from gold. And also, if people want to sit in cash because they're worried about stock markets continuing to plummet, again, the dollar is a favoured destination. So lots of things helping the US dollar at the moment. So always an interesting market to watch. Let's take a look at the S&P. I did not think these stock markets were going to fall off a cliff like they have done. I did think when I was looking at it anyway, whenever that was, when's this part here? May the 2nd, so beginning of this month. We saw the S&P come back to the Russian invasion lows. Those invasion lows were around 4,100. And I thought, are they going to hold? And we're going to bounce back up again to 4,600. And that hasn't been the case. We did see a bit of a bounce, as you can see. But then, bum, 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 bum. We've sold off and yesterday traded down to 38.60. We have had a bit of good bounce back on the S&P since then. But, yesterday it traded down to its worst levels since March of last year. So a 12-month low on the US benchmark stock market index yesterday. And even though we've had a bounce, for me, I'd still be a seller. I'd still be a seller into strength, because that trend is down. We've lost a big level. So for me, stock markets still look vulnerable to further weakness. If we look on the hourly chart, if you take the hourly chart back, what's that high there? 21st of April. So if you take the hourly chart back to there, the market can still rally another 150 points from where it is now, and it's still in that downtrend. So I am absolutely a bit cautious when it comes to stock markets. I saw that someone put in a good question, actually. How are you navigating the slide in markets in your long-term investment accounts? It's a good question. A lot of my longer-term investments, so forget trading, are S&P and Nasdaq trackers. So they're ETFs, exchange-traded funds, that just track the performance of the Nasdaq and the S&P. And I have been selling out of the S&P and the Nasdaq ones since September last year. And I thought I was too early. So I got shaken out in September last year here. So I dumped some there in September. And then the market, of course, bounced back and carried on higher. So I stuck with it. And then the markets clearly started tanking in Jan. So I offloaded some more, didn't buy any more, because normally I just, like a lot of people, just put money in every month and buy some every month and just, do it that way. So I have got in my longer term investment accounts just cash, not all cash, but very little S&P and Nasdaq exposure that I had a year ago or even 8 months ago. Because I want to be an investor in markets that are doing this, that are going up. I don't want to be putting money in if these markets continue to go down. And for me, and we don't know, do we? But for me, the fact that it's broken below the lows from the Russian invasion this week, that's a pretty bearish sign. Let's see how it turns out. I mean, if you're taking a 30-year view, then of course it doesn't matter, I suppose, does it? It all gets smoothed out in the wash. But I do wonder, are we going to see these stock markets under a bit more pressure? Let's see what happens. But I would expect if we do get further strength from here, the risk is we'll see more selling come back in. And it's the same, of course, if you look at the Nasdaq. So the Nasdaq actually peaked in November last year. So the Nasdaq yesterday traded down to its worst levels since November 2020. So that was a year and a half low for the Nasdaq yesterday. So again, we could say that trend has accelerated if we looked since April. Let's get rid of this for a second. So if we pick up on the trend since April. So even though we're seeing an okay bounce back today, for me, with the Nasdaq, it doesn't actually change this trend for the last month or so, which is still down. So pretty volatile, and I think still quite vulnerable stock markets up here. Ftse 100, let's have a look at the Ftse 100 on a daily chart. I mean, the Ftse has held up better. I say this every week because the Ftse clearly is a different mix of stocks compared to the S&P and the Nasdaq. So the Ftse at the moment is only slightly negative for the year. Yeah, so the Ftse is only down. Basically, it's where it was at the end of last year. So we've seen lots of volatility, but it is not down like US markets are down because it has a more defensive mix. It doesn't have, so many tech stocks, so many big growth stocks, all that sort of stuff. It's got traditional blue chip dividend paying stocks. So it's weathered the storm a little bit better, the Ftse. And if we have a look at the Nikkei, have I still got the short on? So I've still got a short on the Nikkei. I think we did that in a live stream. There's the pound against the dollar short. I mean, that's done really well. That was from the 29th of April. So that's done okay. That's up 560 for 250 risk. The Nikkei trade, someone actually said last week, can you talk more about your existing trades? The Nikkei trade, we did that in a live stream on the 29th of April for £100 risk. And the reason was because the trend was down. So the 29th of April would have been here. Yeah, so we did a live stream on that day. So went short with a stop up here somewhere probably. So the Nikkei, for me, that trend is still down. The trend has been down since September last year. So even though, again, we're seeing this bounce back in stocks, I still think they're a bit vulnerable. So there you go. Crude oil. I've said that. I think I'm going to say the same thing about crude oil I said last week. I think it's a boring market now, relatively speaking, relative to what we have seen for crude oil over the last couple of years. We had that explosive move up to 126. Again, Russian invasion driven. Then it flipped back down to 92. And I just think we will just have this flip-flopping around $100 for crude oil. We did do a trade last week on crude in the live stream. I think I've come out of it. What did I do? Did I move my stop loss? Let me try and remind myself. Oh yeah, £8. Came out of it for an £8 profit. Okay, I moved the stop to break even. So I had been short crude and clearly it's blipped back up today. But for me, I'd still be looking to go short again. If we look over the last month or so, it doesn't stay up near 110 very often. So for me, it wouldn't surprise me if we saw crude oil perhaps turn a bit lower next week. But it's just, after all that crazy volatility, we're just seeing this flip-flopping market now. So yeah. Natural gas, big reversal in natural gas. So it's been a good market this year. Lost money on the last trade on natural gas. Is the top in for natural gas? I don't know. But, a really volatile week or so. It touched $9. It's been as low as $6.50. What's that? So that's a $2.50 swing. So that's about almost a 30% swing in natural gas. So for me now, I would do nothing personally with natural gas. I'd be happy to stand aside. I suppose it's quite interesting. This sell-off on the 10th of May held above the old lows at 6.5. So 6.5 has ended up being a bit of a big level for natural gas. But I do wonder if, again, after some of the excitement we've seen this year, with this market going from about 3.5 at the end of last year to 9 the other week, are we just going to see a bit of sideways trading in this market now and a lot of that volatility take a rest? Let's see what happens. So for me, the energy markets are perhaps going to be not the most interesting markets in the weeks ahead. Bitcoin. Oh, all the hodlers. What are they do? What are they going to do? Bitcoin is at 30,700. Someone said, why is Bitcoin falling? And I don't, I think there's an element of, people just deserting riskier assets. And I don't think you can get that much riskier than cryptocurrencies, in my opinion. Yeah, and I think there is very much a momentum-driven market, isn't it? Where, people chase the market up, not too much interest on the way down. I suppose it's interesting that it had a look below those old lows from July last year and actually January last year. So the 2021 lows are around about 28,000. So 28,000 is a big support for Bitcoin. It blipped through it yesterday. So I suppose if you wanted to do a really aggressive trade on Bitcoin, you could be a buyer. Where is it now? 30,700. and put a stop loss underneath yesterday's low. What was yesterday's low? 25.6 was yesterday's low. But yeah, that is it's not looking too good down there, is it? But it'll be interesting. Does it start to make a base down here? Because you can see, very clearly on the chart there, how this area had been a floor for Bitcoin over the last 18 months. I've just seen someone said it's because of the lunar debacle. I don't know anything about that. I don't follow crypto news, but I'm sure you're right in that. I did see that Coinbase statement this week, wasn't it? Where Coinbase, the crypto exchange, we did a video on those, got clobbered. And one of the things they said was, in the event of bankruptcy, did they say that if you have any crypto with Coinbase, it's not going to be very easy to get it back? And I think that didn't really help sentiment towards Coinbase. But there's Coinbase. So IPO'd in April last year. It touched, what did it touch? 428 on the day of its IPO. Traded as low as about 41 yesterday. So, and again, of course, with cryptos in decline, you'd expect the likes of Coinbase are going to see a lot less activity. So Ethereum, I'm going to guess it's the same sort of thing, isn't it? Ethereum and Bitcoin in terms of their movements. We do have big support for Ethereum down at 1600. So there we go, 1600, 1670. It did hold above it yesterday. So again, for me, the same thing. If you wanted to be really aggressive on these cryptos, if they hold today, an aggressive trade would be to be a buyer and put a stop loss underneath the low. It's not something I would do, but it's a really good reminder. This I've said, if you've watched a few of these live streams, I've said that I do hate crypto markets, not because of what they stand for and everything else, because I don't really care about any of that stuff, to be honest. It's just a market, but I think it absolutely pulls in people to trading who wouldn't normally trade, and they think the way to trade is basically to buy and stick your head in the sand and hope it goes up. And they've been well rewarded for just ignoring any risk controls, up until November last year. If you'd have bought any of the times Bitcoin had halved or whatever, you'd have had a lot of open profit. And I just think, if we did see Bitcoin slide further from here, it's half of what it was in November. It's a reminder that a profit isn't a profit until you take it. And in cryptocurrency markets, you need to manage the risk just the same way you do in any other market. There's no such thing as free money just because it's a cryptocurrency market. Okay, so we've done the energies, we did gold, silver, stocks. I think that's it, isn't it? I don't think I've missed anything. So for me, I'm going to jump into the questions in a minute. What to watch next week? For me, gold's an interesting one. I am surprised it's got hit as much. I think this 1750 to 1800 is interesting. Do we see some strength come in? I think if we start pushing below 1750, the risk is that perhaps we're going back to these old levels from March 2021, maybe down about 1680. So for me, 1750 for gold is definitely the line in the sand. Stock markets, we're seeing a bit of a bounce today. But I would, for me, let's say they finish a bit higher today, I would still be wary of those getting sold into next week, which can be good opportunities. So we'll see. We'll see what happens with that. And the dollar index, absolutely my favorite market. The trend that keeps on giving in the dollar index. I mean, it is very overstretched looking at this trend. This 12-month trend historically, it did a great job all the way up of sort of hugging that trend line, and then we've just taken off really in the last month or so. So it is arguably perhaps a bit vulnerable up here, but it does keep going up. And for me, I'd be a buyer of weakness if we did see a bigger sell-off in the dollar index. Right, let's just do a quick reminder of the contacts, then we'll jump into the questions. So to find out more, go to Capital.com. Any questions after this? So general trading questions, not financial advice questions, but david.jones@capital.com. At Jones the Markets is Twitter, my Twitter address, and jonesthemarkets.com to find out more about my trading approach. So follow Capital.com on YouTube, Twitter and Facebook. Right, let's have a look at the questions. So I'm going to scroll back to the top. I understand that gold is a non-performing asset. It doesn't earn interest, but it is a hedge against inflation. So why is it doing so poorly? I think because it's almost lost some of its crown as a hedge against inflation, and I think people are seeing the dollar as a safe haven and perhaps a hedge against inflation. So I think it's lost some of its appeal, gold, at the traditional role, as you correctly say, that it's performed over the decades. Perhaps people are seeing other things like the US dollar as more attractive. So that's the thing there. What market do you usually like to trade? I think I talked about that dollar index. It's been a great market for me over the years because the trends have been good and it's not too volatile. It smooths out a lot of the volatility in other markets. Devon Energy. Let's have a look at Devon Energy. Devon, is that one up there? Devon. Is it that one? Devon Energy. That's a great trend, isn't it? Look at that one. So, independent energy company based in Oklahoma, engaged in oil, gas, exploration, blah blah blah. I mean, that's done really well. And even though we're seeing the oil price pretty sideways for the last couple of months, the trend in Devon is most definitely up, isn't it? So again, for me, it's a buy the dips one, isn't it? So so as usual, the only question would be, well, where would my stop go? If I was a buyer now at 67, the closest I want my stop is probably the other side of 52, which is a wide stop. That's like a 20% plus stop. But the market moves around a lot. It's quite a volatile stock, isn't it? But no, that's a great trend in Devon. And even if we sort of sell off towards 50, that big trend is up. So it is. It's an interesting one. That good spot. I'm still in good profits with my gold bought at 1650, but confused as to hold or to sell right now. I was planning on holding long term. Well, if you were planning on holding long term, would you not just stick with it? If you think that long term gold is a good destination for your cash, I would have, if it was me, I'd think, well, I'm going to stick with it. I mean, even for me on longer term stuff, I always have a stop loss and always think about taking profits if the market reverses. So if you bought at 1650, you must have bought way back then. Well, a couple of years ago. So you've seen it go to 2000 and then back and then up to 2000 and back. I don't know. It's up to you. How would you feel if next week it was back at 1650? How would you feel in 3 months' time if it was down at 1450? I think you just need to decide if you're taking a 10-year view on gold. You shouldn't worry. I would suggest you shouldn't worry too much about the short-term movements. Yeah, but if how do you feel if you've watched it go from 2000 to 1400 by the summer? And only you can answer that one. So good luck, whatever you decide with that. Do you trade treasuries and bonds? Would you give a possible balance to a portfolio? Would you have a look at the 10-year US Treasury? I do trade T-bonds. We don't cover T-bonds though, so I can't look at it on here, unfortunately. But no, for me, it's like US Treasuries and Euro bonds are always interesting markets to trade, and they move up, down, same as any other markets. But we don't cover it on here, so I can't show you anyway on here. Gold bounce from 1780. Somebody's saying, who knows? We'll see. We'll see what happens next week. Euro Swiss franc. Let's have a look at that. Euro Swiss. That's interesting, isn't it? For me, that is a short, I would say. So seller of the euro and buy the Swiss franc. We've had this downtrend in place since March of last year. So we're, 15 months into that. Perhaps that's the trade we'll do. We haven't done a trade today. So for me, that trend is still down. And again, for me, the closest I would want my stop loss would be the other side of this high, which was only earlier this week at 105. To give it a bit more room, maybe go above 106. So let's do that. We'll sell Euro Swiss. We'll put a stop loss up here somewhere. Let's say 106.50 and see what happens. 1.0650, and we'll risk £100 as usual. Is the risk on these live stream trades. So there we go. We're going to sell €5,000 against the Swiss franc Stop loss at 106.50 up here, and a risk of, if I end up getting stopped out, I'll lose just over £100. Right, let's sell it. So there we go, done. So yeah, so for me, that trend is still down, and I think it's interesting. Clearly 105 to 106 has been something of a ceiling for Euro Swiss. So let's see. Dollar index, blah, blah, blah. A prediction on the bottom of the S&P. I've got absolutely no idea. I wish I knew, so I could switch all my long-term stuff back in. I mean, maybe you could say, maybe we've seen the bottom yesterday, for example. Maybe that is maybe yesterday's low is the lowest the S&P will go for the next 10 years. Yeah, and today is day one of the next great bull market. That could be possible, couldn't it? Personally, I don't think it is, but for me, I mean, where are the next big supports? I mean, we do have, there's a lot of support from March of last year, from 37.20 through to about 3800. There's decent support down there, but for me, I just want to see it stop going down at the moment, and it just keeps going down, doesn't it? So, and picking, although I think we are sort of hardwired in our head to try and pick bottoms. Think how much money has been lost trying to pick the bottom in various markets over the years. It's much easier. I didn't pick the bottom of the S&P back here in April 2020, but I did okay on the way up once the market had started moving. So for me, I don't worry too much about bottoms or tops in markets, because what I want to try and do is catch the easier bit in the middle. So yeah, I wouldn't waste too much sleep on it personally. Is what I'd say. What I'd say on that. Will you top slice your dollar trade? I do. Yeah, I do that. Because the trade I've got two trades running at the moment in the dollar index. So I've got one. If I show you, I can't remember where they're from. I've got one from back here at 101, which is I've got a stop loss now, probably about here, just locking in some profit, and I've got another one from here where I could still lose money on. So what I do is as the market starts moving, I move the stop up behind it. I never decide, okay, now it's time to come out. I wait for the market to reverse. So I'd never just take the risk off. But I'll just perhaps have a tighter stop loss if I've got a couple of trades running on the same market. But in the past, I think I have run, probably the most I've run on the dollar index is 4 open positions at one time. If we have a trend that's just trundling along, and I can buy into the dips and the risk management side is all right, I'll quite happily run multiple positions and have tighter stops on a couple of them. So for now, I'm quite happy to stick with that and see what happens. How do we know when to buy when a market is in a downtrend? What signs do we look at? Well, the flippant answer, but actually it makes a lot of sense. Let's go back to the dollar index. How do you know when a market, oh, my keyboard's not working. How do you know when a market isn't in a downtrend anymore? Well, what's a downtrend? When the market's going down. So when it stops going down. When the market stops going down, it's not in a downtrend anymore. So here's an example. We're going back to this dollar index, just because it's a market that I know. If we looked at the highs in 2020, and that was the trend, yeah. So for me, even though I did end up buying in January or February 2021, and I was too early really, the market broke out of its trends, so that was the first sign. Perhaps things are changing, and then for me, the real signal is this sort of thing, when it breaks out the trend and then it comes back and it holds above the previous low. So that for me is a suggestion, perhaps the selling is over. Yeah, and that's why on stock markets, for me anyway, with my approach, we don't have that. It did look like it here. If I go back on the S&P, there we go, in March, so it looks like, oh, the market is breaking out of its downtrend. Okay, let's jump forward. Oh, this looks okay. The market's going to sell off. We're going to get another bounce off 4100, and then bang. No, we don't. So it did for me up until about a week and a half ago. It did look like maybe the S&P was starting to make a base. The fact it's gone to new lows this week throws that idea out the window. Okay, but those are some of the things that I would look for. But like I say, don't agonize too much about trying to buy the low. You know, for me, it's much easier when the market starts moving higher. Do you think a second negative quarter of GDP is priced into the market? Yeah, it's interesting, isn't it? I wonder, of US GDP, I presume you're saying. Yeah, I don't know. It's a good question. Because then they would officially be in recession. It does feel as if markets are expecting recessions. So I suppose you could say it's more priced in than not. It wouldn't be a massive surprise, I suppose, if the US did have another second quarter. So, yeah, good question. Not so sure on that one. How would you buy? What would you buy in the current market with a smaller account? Almost everything I watch got hit. Don't do anything then. Just wait. And I know it's hard. It is hard to be patient, you know. And the size of your account shouldn't matter because you can still, you know, on this. So this is a £19,000 account. So the risk on any one trade is 300 quid at the moment that I do on this account. If I had a £100 account, I'd make sure I wasn't risking more than about £3 on any trade. Yeah, so the size of your account shouldn't really matter. It's all about your risk management. But people don't care about risk management, and this is why most people lose money. So for me, you know, the risk is the important thing. And if you can't find something to buy or sell, don't do anything. You know, I think this is the problem. This is one of the problems, I think, of you know, the boom clearly of the internet the last 20 years. All of us now have all of this crazy real-time stuff on our desks, on our phones, wherever, and it's too tempting to just keep jumping in and out of the markets. There's a really good chart. Hang on a second. Average holding period of stocks. Hang on a second. And it shows you. I don't know if this is the one I'm looking for. Here we go. The average holding period of shares on the New York Stock Exchange. Yeah. So look at it in the 1930s, 1940s. People were holding stocks for like up to 8 years. Yeah. And it's been in decline since the 60s. And then this is where we are now. So in the 90s, it's really accelerated. So the average holding period now is what? It's not even a year by the looks of it, is it? So lower fees, commissions, you know, short. It's very short term, and people are getting more and more short term. And I think, you know, we need to be a bit more patient and give trades time to work out. I think I've said this before. I was really surprised by this stat that I heard a few months ago. That for us, almost 50%, not quite, but almost 50% of clients close out their trade within an hour, which is, to me, that is absolutely ludicrous. Absolutely ludicrous. You know, there's going back to my favourite, the dollar index. That's been such a great market to sit with that trend. Why would I want to close that trade out in an hour? So I'd say don't be too short term. Be a bit patient. If you can't find anything, wait, because these are still crazy markets at the moment. And think about your risk management, because risk management is just as important on a small account as it is on a big account. Tesla. Let's have a look at Tesla. So there was that announcement, wasn't there? Was it lunchtime? That Mr. Musk might not be buying Twitter, but then he might be buying Twitter. Who knows what's going on with that? I would buy Tesla here. Maybe this is the other trade we'll do. So I would buy Tesla. So for me, it's come back to that spiky low from February, whatever that was, down there at 689. So for me, it's interesting down here. Yeah. So I'm going to be a buyer of Tesla because I've got a nice place to put my stop. So I go 650 for a stop on Tesla, 650. I only want to risk losing 100 quid. So I think I can only buy one share in Tesla. There we go. At 765, stop at 650, risk £94. Okay, let's buy that. Let's do that. Yeah, I think it's interesting that it's held. You know, it's held above this old low. So for me, even though again Tesla has fallen out of this what had been a great uptrend over the last couple of years, for me, I'm still looking at these big old support levels. So quite interesting to see if it can hold down here. Let's see what happens next week. Do you have? Hold on a second. Do you have any thoughts on Vale? Vale, I don't know. I don't think I've ever heard of them. Vale, what do they do? World's biggest mining companies. Okay, nickel, iron ore and pellets. I would. I think it's a tricky one there. It was a great trend, wasn't it? Nice little short-term trend there from November, from $11 up to 20. I think it's almost, for me, it's almost a coin flip here, isn't it? Where it could go, we might see it go back up to 21, or maybe it goes back down to 12. So I suppose, I don't know, what would you do? If I was a buyer now, I'd put my stop under 14. But it's sort of a bit in the middle, isn't it? A bit in the middle of that old trend. So for me, there's nothing really that clear on that one. Twitter, I think we did a video on the channel when, was it the day that Elon Musk announced he was taking over Twitter? Yeah, it was here. And I went short. So I went short, hang on, let's have a look. Let's see. And it got closed out, so it made money. Where was it? Twitter. There we go. So we closed it on the 29th of April and it made 192 for 250 risk. For me, if it goes back up again to 50, I would go short because I think there's still, and that, you know, that's why Twitter wasn't trading at $54.20, the takeover amount, because there's still uncertainty as to whether this deal would go through. And you can see, you know, clearly what it's done today on Mr. Musk, you know, on saying that maybe it's not going to go ahead. And oh, actually, yes, it is. All over the place. But for me, I'd wait to see if it gets back up to 48 to 50 and look to go short again. Euro yen. Let's have a look at euro yen. Euro yen. Oh, it's just a bit messy, isn't it? I mean, it's not, again, nice trend here. Bit messy here. For me, I would be a buyer. If I had to do a trade on euro yen, I would be a buyer on the basis that the weakness over the last couple of days has overshot. It did break out euro yen, you know, through these old highs, and it's just got absolutely hammered. So for me, the trade I would do would be a buyer with a stop at 132. But it's quite, again, it's quite messy. And lots of markets look like this at the moment, you know, because the volatility is so crazy. Clearly the markets are all over the place. And if you don't like volatile markets, and I'm not a fan of volatile markets, it makes much more sense just to sit on your hands and wait for things to calm down. Alcoa. Is that these aluminium, isn't it? Is it aluminium or something like that? Company? Oh no, eye care company. Oh, that's Alcon. Sorry, if I typed the name in right, it might help. Hang on a second. One of the world's largest producers of aluminium, or aluminum, as I'm sure they would say. I mean, I would argue the long-term trend is still up off the March 2020 lows. I mean, the thing has come from almost $100 in March to it's almost halved, isn't it? So for me, because that long-term trend is up, I would still be looking to be a buyer, and I would treat this as a pullback. Again, the only question would be, where would your stop go? For me, I'd be a buyer with a stop the other side of $50, because that big trend is still up, you know. But we have seen quite a lot of cooling off of some of these commodity prices in recent weeks. TBT, what's TBT? The bonds. Is it the bond thingy? The ultra short. Is that the right one? Ultra short 20-year treasury. Or is it the wrong one? If you can put the names in rather than the codes, just to make sure I'm looking at the right ones. Gold. We looked at gold. Someone's getting very excited about gold and silver. The reversal has started, has it? And it's gapping up. Is it? I don't think it's gapping up. No, it's not. Calm down. Calm down. It's not looking that dramatic in gold and silver. Uranium and yellow cake. I don't think we cover. We don't cover either of those, unfortunately. I know we don't cover uranium, but we don't cover those either. Sorry. People want instant everything, not just mashed spuds with smash. It's a throwback to the 70s there. So I got that one. Good afternoon, David. Do you ever average down? Never. No. So if I bought something, what did I buy? So one of the stocks I recently bought, WPP. It's not those. Where's the other ones? It's the UK listed WPP. It's not coming up. Okay, another one I bought, HSBC. So I've got HSBC in my. That doesn't look right. Why is that showing wrong? Okay, I'm a bit confused. What's another stock I've got? Severn Trent. So I've got those. I look on a daily chart. So for me, and I bought them because it's a good trend, but I bought in, I think here, back in 2020, about £24 with a stop at the other side of 20. But because they're falling, I wouldn't buy more. I think if you average down, it's one of those things that it can make people feel better because you've bought something at 24. Oh, I'll buy some more at 22 and my average is going to be 23. But you're basically compounding the mistake you made first time round. So I think the problem is with averaging down, you can get into something that just absolutely falls off a cliff and you're buying in all the way down. So for me, I never average down. So yeah, Palantir. Palantir was an old favourite last year, wasn't it? It's sort of a meme stock last year, wasn't it? Big data, isn't it, Palantir? Oh, it's just got... I remember looking at those and wondering, whenever we looked at them last time, is that downtrend over? And lo and behold, this week they've slipped lower. So for me, the trend is definitely still down in Palantir. So yeah, so for me, I'd be a seller into strength rather than trying to buy the bottom in Palantir. Dollar yen, I'm guessing, is going to look a lot like the dollar index, isn't it? There we go. So for me, because of the trend, I'd still be a buyer in dollar yen. I mean, if you wanted to go short, because I know people, again, love picking tops the same way they love picking bottoms. If you want to go short, if I went short now, I would put my stop the other side of those highs. So the highs so far has been 131.35. Yeah, I would, but personally, I'd still be looking for buying opportunities, even though, again, it's a 20-year high or whatever it is. Okay, TBT is the ultra short one. So TBT is a way of going short US Treasury bonds, so US bonds. Here we go. So yeah, so even though we don't cover bond markets on our platform, the ETF, this ETF, ProShares Ultra Short, TBT thing. Yeah, so again, it's a good trend, isn't it? Great trend since last December. So again, for me, I'd be a buyer on dips of this one, of the TBTs. But yeah, I'd much rather look at a T-bond chart, but we don't have T-bonds, unfortunately, on here. Right, I think we're going to wrap things up there, to be honest. So I think we're done, actually, aren't we? There's not going to be a live stream next week, unfortunately. It's my son's 21st birthday. So I'm going to Barcelona Grand Prix, hopefully. So no live stream on Friday. Back to normal in 2 weeks' time. There will be videos as usual next week. I think on Monday, I'm doing a video on strategy, on short selling, how to short sell, what to look for, how to manage risk, all that sort of stuff. And then we'll do on oil on Wednesday and something else on Thursday. So there will be content on the channel. There just won't be a live stream next Friday, but we'll be back in 2 weeks for the live stream. So in the meantime, go to Capital.com to find out more. David.jones@Capital.com if you have any questions. @JonesTheMarkets on Twitter. JonesTheMarkets.com to find out more about me. And follow Capital.com on YouTube, Twitter and Facebook. So loads to watch at the moment. Crazy markets. And if you're, if you're struggling, I know lots of people are struggling in these markets. I'm finding it's a much harder year for me in my own trading than for me. I think I've got to go back to 2008, to be honest, to when it was this hard, I think, to find good trading opportunities with sensible stops. So, I'm a fan of big trending markets, not crazy volatile markets like we have now. So there's nothing wrong if you look at a market and think, you know what, I've got absolutely no idea. There's nothing wrong in doing anything, in not doing anything, and just sitting it out and waiting to see if things calm down a bit. But for me to watch next week, gold, I think it's a good one to watch next week. That dollar index to see, is it actually going to stop going up at some point? And also stock markets. I think stock markets will be vulnerable to be getting sold into. But let's see. We'll do it all again next week. And good luck with your trading in the meantime, and enjoy the rest of your weekend from tomorrow.